Mawarid Finance. فالك طيب.
Still, if you have enough cash in your pocket today to tip your valet when you leave. Okay. Some people do, some people don't. The first time I actually went to dinner with my wife, with my now wife, she kind of judged me a little bit because I got into the car, I didn't have cash to give to my valet, and then I just said thank you and drove off. Well, luckily she didn't judge me too hard because now she's married to me. I'm Arsalan. I'm part of the fintech team looking after fintech partnerships across Eastern Europe, Middle East, and Africa at Mastercard. And the reason I'm standing here today, and the reason I love my job, is because with fintech partners and with the help of those partners, I get to solve for daily nuances, just like being able to tip your valet when you don't carry cash, or making sure that your SMEs have enough liquidity to increase the basket size of their next order. Let's take a trip down memory lane. I'm not going to go too far when the first computer was invented or when the first fintech came into being, but just about 2018. The world was business as usual. Everybody trusted their banks. Everybody had a bank account, a debit card linked to that account, and then they would use that for their online or normal purchases. There were a few disruptors in the market, but not a whole lot going on. 2 years later, 2020, the pandemic happened. The whole world kind of just went into a change and a shift. Consumer expectations started changing. A lot of people were talking about instant gratification. People were not able to walk into banks and to be able to interact. And that's when people started taking notice of fintech players becoming more and more prominent to be able to cater to certain activities that banks were maybe not able to. 2022 happens, 2 years down the road. It's the fintech boom. Like people were talking about AI today, fintech was the buzzword. Everybody had crazy valuations if they were a fintech. If I change my name to Arsalan Fintech, somebody would probably give me a 30x valuation, right? But those times have passed. Now in 2025, the resilient fintechs have survived. A lot of fintechs that had those 30x valuations a little while back, they don't exist anymore. But the ones that do, you can be sure of one thing. They have strong leadership, a sustainability and growth mindset, and those are the fintechs that we should look to partner with, and those are the fintechs that we need to actually work on growing with. A little bit about the market size. So we know that strong fintechs have survived, they exist today, but what's the opportunity like? Well, the fintechs are looking to disrupt pretty much every aspect of digital payments. The overall estimated market size at about 2030 is going to be that fintechs deliver about $1.5 trillion in revenue. That's quite a bit. On top of that, today it's estimated that about 103,000 fintechs exist globally, employing about 12 million people. That's about 110 people employed by a fintech on average. Some of them are bigger, some of them are smaller, obviously. A couple of things about usage behavior as well. 76% of people surveyed over a global survey that Mastercard conducted said that they're actually willing to pay a bit more or sign up for a service if they can see instant gratification out of it. If an app is available to download immediately, if you're able to sign up and start using a service, they're willing to interact with it 76% more likely. And about 78%, it's another important number, is about the growth of fintech. So we talked about it all day. The overall digital payments ecosystem is growing. The overall banking ecosystem is growing at about 14%, I believe, in the UAE. But fintechs in the UAE are growing at about 78% year on year. That's higher than the global average. So the opportunity exists, the pie is massive, and the sustainable fintechs are existing today. What do we do next? We need to identify that fintechs are not only just digital wallets anymore, they're impacting every aspect of your daily lives. Whether you're a business, whether you're a consumer, one way, shape, or form, you're going to have fintechs interacting with you. This is not an exhaustive list by any sense of the imagination, but on the consumer side, you can see fintechs, much like the ones I talked about, where they're digitally enabling valets being able to accept payments. They're focusing on Gen Z, Gen Alpha, the up-and-coming generations, to make sure that they are more ingrained into the fintech payment ecosystem. Buy now, pay laters, I don't need to tell you guys about it. Klarna, global example, Tabby, Tamara in the local region. They're household names by now. A lot of fintechs are now focused on the creator economy. They're focused on migrant enablement, which is a key aspect of the grain of society in the UAE. And then another one that's up and coming, we see a lot of traction on, is e-gaming. Again, this is not an exhaustive list, but a few trends that we see. On the corporate side, just like the panel before me was talking about, there's a massive gap in terms of how payments on the corporate side can be digitized. We're not only talking about just using your corporate cards to make payments for your travel or when you're taking your clients out for a dinner. I'm talking more about supplier payments, B2B payments. The size of the pie of accounts payable just within Eastern Europe, Middle East, and Africa is about $7 trillion. And about 1% of it is actually on card rails today. So there's a massive gap in terms of what fintechs can enable. SME enablement, we had a full panel session about it, so I'm not going to get into too much details about it. Another trend that we are seeing is invoice discounting and dynamic discounting for early payments of invoices. And then on top of that, one thing that's very important and cannot be overlooked is the technology and enablers in the fintech ecosystem. So not your consumer fintechs, not your SME fintechs or your corporate fintechs, but also the tech enablers. Processors, tech providers, banking as a service providers. Mawarid is an amazing enablement partner of ours as well. Orchestration platforms on the acceptance side. There's so many aspects of digital payments that the fintechs are now able to touch. Now, why am I covering such a broad plethora of these services? Is to land onto this slide. I believe Raji mentioned this a little while earlier, that it's more about collaboration than it is about competition. The priorities of fintechs is very different from what traditional banks' priorities are, right? They have different addressable markets. I mean, how many banks can we think about that have enabling your valet to be able to accept card payments, or a youth expense management card to be their top 5 or top 10 priorities? I can hardly think of any traditional banks operating within that ecosystem. They have different expertise. I'm just going to quickly break down what the financial institutions or traditional banking partners bring to the table, and then what your fintechs bring to the table and how they can collaborate, right? So financial institutions, I think this was repeatedly talked about. They're regulated, they're compliant, they provide a steady base for ecosystems to be built upon. They provide business stability and strength to the region. They bring in existing infrastructure. Whereas on the other side, the fintechs bring, just by the nature of their existence, a disruptive and innovative environment. They're fast-paced, they're chaotic, they're not scared of breaking things. They're also flexible and adaptable. We talked about pivoting a little while ago in one of the sessions. It's very key and something fintechs are very good at. Also, the outside-the-box thinking. Again, solving a problem that banks probably don't even have in their radar. You know, your valets, your youth propositions, SME lending, maybe it's a lower priority. And the reason that big Mastercard logo exists in the middle is not for marketing, but it kind of fit all of this together, where it talks about the unity between the two. So that collaboration needs to exist, because technically neither the fintech nor the bank is looking at each other as competition, but as a collaboration opportunity to cover more of a market share. That 1.5 trillion market revenue share that we talked about is something that the banks can be a part of. So that logo basically kind of fits everything into it and talks about the union. Finally, what's Mastercard's commitment to it? I mean, I've been standing here talking about how important it is to work with fintechs and about collaboration. I'll take you on another very short history lesson. In the past, how Mastercard was working with fintechs and how the whole ecosystem was operating was fintechs would reach out to BIN sponsoring banks or financial institutions and try to convince them that, hey, partner up with us, let's get a proposition out to market. Then they would have to separately talk to processors, have that conversation separately. And then right after that, they would probably have to talk to another program manager that's going to provide them fraud solutions. It was just chaotic. Luckily, we've kind of moved away from that ecosystem with the help of partners like Mawarid. We've been able to get to a point where we are today, where a lot of those nuances don't exist. A framework now exists where a fintech can reach out to Mawarid or can reach out to Mastercard and know that they're going to have a unified line of communication to work with partners collectively to take a card proposition to market, to go to market with a bank that provides stability on the back end of it together. There's also regulatory alignment that we worked on, and we've been working on it for the past few months to help develop it, where we are today, where you don't have to ask questions that don't know the answers to. What kind of a license do I need? If I can partner up with a bank to not have to go through a regulatory approval process, those things are being ironed out. But Mastercard's commitment today is that we're far from done. What we want to do and where we want to get to is what the future looks like. I want to be able to, with the help of partners like Mawarid and some great enablement partners and processors, be able to allow fintechs to launch cards in markets within 15 days. We want to have a framework for regulatory environments as well. So you don't have to go in and figure out by talking to different parties what is required, what's next. All of this is going to be laid out in single documents. We want the whole process for fintechs, and we're getting there, to be digitized, where you don't have to reach out via LinkedIn, via emails and phone calls to Mastercard, to your banking partner, to a processor, but to just go on to one portal, sign up, select your partners, and move on. This is where we would like to be, and this is what we're working towards with partners like Mawarid. So finally, just to wrap it all up and to emphasize that we're getting there to digitize the whole ecosystem, have a look at Mastercard's Product Express platform. Just go sign up, explore, select your partners, collaborate with them, decide on what the next steps could be. And you will see that just by that collaboration and by being a partner of the Product Express ecosystem, you can start implementing, testing, and determining your go-to-market strategy very quickly. I wanna, just as a final point, continue to encourage you guys to help us work diligently, develop this ecosystem, which we've come very far in. So people like me don't have to feel embarrassed in front of their wives when we're not able to tip our valet and don't have cash. Thank you so much.